Let us bring in our floor show traders right here on the New York Stock Exchange. I am joined by Sarge.
Hey, Liz.
Stephen Guilfoyle, our good buddy here. We are also joined by Luke Rahbari at the NYMEX and Peter Schiff, who, of course, is the gold bug. Peter, you're kind of the guy of the hour here because gold in the early morning session had spiked significantly. Is coming up off those highs, though. Do you see this? It's scratched back about $30, and we're not up as much as we were earlier. What's going on?
Well, you know, this is probably the most unloved bull market I've ever seen in gold. We've been climbing this wall of worry. So I think too many people look to take profits. They really have no idea how high the price of gold is going to go. And it's not the coronavirus that's driving it. It's Fed monetary policy, and especially the additional easing that I think the markets are correctly starting to price in is going to result from the coronavirus.
Okay, I want to bring Sarge in because, Sarge, you heard what Peter said regarding gold. Gold is the trade of the moment, definitely, when you're looking at that. Although, tell me what you're seeing here with the markets and what you expect in the next, let's call it, 55 minutes of trade.
Well, I'd love to see us hold the levels we're at for 55 minutes. This would be good enough on a day that we were down more than 1,000 points on the Dow.
Okay.
Peter is right about the Fed because I heard you mention the Fed funds futures before. Right now they're pricing in a rate cut on the short end of the yield curve for April, another one for September, and a 44% chance of a third cut in December.
Okay.
So that's kind of significant. Although I don't see, I think that the coronavirus is such a huge part of this. This is not a Sanders sell-off. I really think it's something that investors have to get back. They have to step back.
What are you buying then? Because, I mean, look, you've got Apple down more than 4%.
I bought Apple this morning.
You bought Apple. What else did you buy?
I bought Amazon this morning. I bought Disney this morning.
Okay.
All three at these levels are trading higher than when I bought them. I bought them for all technical reasons. I do believe these are good businesses, although some of them may be overvalued in the historical sense. Okay. That's not of concern right now because if this turns into a trade and not an investment, I can still make money.
Luke Rahbari, I want to get to you right now. What is the metric that you are watching for that will give you either a green light flashing or there is a further leg down on this issue?
One of the metrics, Liz, is going to be what you talked about earlier, which is the VIX levels. Remember, normalized VIX is somewhere around 16 to 20 for some people, 18 to 24 for some other people. We're just getting back to a normalized VIX. Volatility was so damp and so low. So let's see where the VIX goes. That's one of the levels I'm watching. I also want to watch the chip stocks. I'm going to look at the low of the chip stocks and then see where they close out. That's going to be important.
Let's be clear about that. Let's be clear about that because they have the most exposure to China. These semiconductor stocks, I believe Advanced Micro Devices was hit the hardest earlier, ticker symbol AMD.
That's another Sarge long.
Yeah, that's another.
Yeah, they have the biggest exposure, but also they're going to make the biggest comeback. And also, we're not going to use less chips ever from now until the end of history, unless something huge happens. So the chips are going to be what you want to look at. And I also want to look at some of the biggest stocks that we've talked about, what Google is doing, and some of the biggest dividend-paying stocks are doing. Are they staying steady? Because their balance sheets are stronger than a lot of weaker stocks.
Okay, Peter Schiff, gold is at a 7-year high, but guess what is outperforming gold? And there aren't a lot of investments that are outperforming gold right now. TLT, which is an ETF that basically mimics the 20-year Treasury, and I believe that that's having a better day even than gold. What do you say about that? And explain to our viewers why you think that is.
Well, I think anybody who's taking refuge in long-term U.S. government bonds thinking they're a safe haven is going to lose a lot of money. But in the short run, I mean, it's a crowded trade. People pile in there. What the bond market is doing is they are correctly anticipating future Fed rate cuts, but not because they're appropriate, but because that's what the Fed is going to do. If you remember, back in December of 2018, when I was on your program, just after the Fed hiked rates for the last time, that's the last time you saw the stock market this week, I said the next move that the Fed would make would be a cut. I said they were going back to zero and that they would go back to QE. They've already gone back to QE. We're not quite at zero yet, but the coronavirus is simply giving the Fed an excuse to do what it was going to do anyway, but it is not going to solve the problem. The Fed is not going to cure the coronavirus. It's not going to cure the economy. What the Fed is doing is going to make the economy sicker, and ultimately the inflation that they unleash is going to destroy the bonds that people are buying. The real safe haven is gold, and that's what people should be buying if they really understand the problem.